If you run a home care agency and you travel for business, there's an important tax rule you need to understand because business travel is one of the easiest deductions to lose in an IRS audit. And one of the biggest mistakes business owners make is assuming if I mix a little business into a trip, the whole trip becomes deductible. But that's not how the IRS looks at business travel. I'm an enrolled agent, a federally authorized tax professional with over 14 years of experience in tax and accounting, and I focus on helping home care agency owners understand their numbers and stay compliant. Now, not all travel qualifies as deductible business travel. The IRS generally looks at why did you travel? How much of the trip was truly business related? And was the trip primarily for business? This is where many business owners get confused because replying emails during a vacation or adding one meeting to a personal trip does not automatically make the trip deductible. The IRS looks at the substance of the trip, not just the label. One important concept to understand is the overnight rule. Generally speaking, you must be away from your tax home long enough to require sleep or rest. For example, if you fly somewhere for the same day meeting and return home that same evening, some transportation expenses may qualify, but you may not qualify for overnight travel treatment. On the other hand, if the trip requires an overnight stay, then additional expenses such as lodging and certain meals may become deductible. Now, let's talk about documentation because this is where many deductions are won or lost. The IRS wants records showing where you went, when you traveled, who you met, the business purpose, and how much was spent. Ideally, those records should be created at or near the time of the trip, not recreated months later during tax season. And while tax law does not specifically require proof of pre-existing business intent, having that documentation can significantly strengthen your records. For example, emails, calendar invitations, scheduled appointments, conference registrations, documented phone calls, or correspondence with prospects or referral partners. These records help show that the business purpose existed before the trip. And this matters for home care agency owners. If you travel to meet referral partners, attend compliance training, visit agency locations, attend conferences, or improve business operations, you want documentation showing that those activities were planned in advance. Simply traveling somewhere and networking casually later is a much weaker support. Now, let's make this practical. Examples of potentially deductible business travel might include industry conferences, administrator training, compliance seminars, care coordination meetings, multi-location operations meetings, or travel related to improving systems inside your agency. But the key question is always, was the trip primarily for business? Because if the personal side becomes the main focus, the deduction becomes weaker. This becomes more important when family members travel with you because bringing a spouse or child on a business trip does not automatically make their travel deductible. The IRS generally expects a legitimate business purpose, real business involvement, and proper documentation. Now, the good news is this doesn't need to be overwhelming. You simply need a clean system, And because many business owners struggle with organizing travel expenses, I created a free business travel calculator. And I'll show you what it looks like. It's designed to help you organize travel expenses, think through documentation, and separate business activities from personal activities. But the calculator is only a starting point. You still need your receipts and supporting documentation. And I strongly encourage business owners to save those receipts inside their accounting system. For example, inside QuickBooks Online, you can attach receipts directly to transactions for travel, lodging, flights, business meals, and transportation expenses. That creates much cleaner documentation if questions ever arise later. You'll find the link to the calculator below. Use it as a starting point for organizing your records. Now, one final thought. The goal is not simply to claim deductions. The goal is to support them. Because if the IRS ever asks questions, clean documentation matters. Now that you understand business travel, the next question becomes, what vehicle expenses are actually deductible? Because business travel and vehicle mileage are not the same thing. In the next video, I'll walk you through vehicle and mileage deductions, what counts, what doesn't, and how to think about them correctly. And once you understand that, you'll make clearer decisions, keep stronger records, and feel more confident as your business grows.